Welcome back, investors. Jake here. Well, I did it. I did it for you guys. A week ago, I bought 1 week put contracts on the S&P 500, betting it would go down. And in a way, I knew this was a win-win. Either the market would go down and I'd make a little bit of money, or the market would go up and everybody else buying and holding in this market would make money. So in this video, let's talk about why is the market green? We're going to check the technicals of the mega caps, and lots of technical trend lines have been broken by the Fed. So what the heck is going on? And at the time I'm filming this video, currently all of the indexes are green. Dow Jones up 0.2%, S&P up 0.54%, NASDAQ up 1.3%, as the stock market is having its best weekly gains basically in 2 years. What's the cause of this? It's not really a mystery. The Federal Reserve announced its first interest rate hike 2 days ago, and they're signaling that 6 more are coming this year. Now, why would the stock market go up on this news? And the reason why is because Fed Chairman Jerome Powell said the economy can take it. The economy is strong, the economy is doing well. When you think about the Fed's mandate, it's not to make sure that the stock market goes up over time. Their two-part mission is price stability. They want basically 1 to 2% inflation a year. The other one is full employment. They want to make sure that everybody who wants to find a job can find a job. And the economy is still roaring, guys. Companies can't find enough workers for everything they want to do. This is leading to wage inflation, as once again, companies have to pay people more in order to retain them. So this Fed interest rate hike, I've said this before on my channel, but anticipation of an event is often scarier to investors than the actual event. So let's think about this Fed rate interest hike in the big picture here. Currently, it's at 0.33% as of March 17th. So if you apply for a mortgage, you apply for an auto loan, it just went up basically a quarter point. And here is the federal funds effective rate over time. It got as high as 19% in June of 1981. And currently, we're basically here. We're at 0.38. Now, it's true if you look at this chart, these shaded regions are recessions. So to control inflation, the Fed keeps raising the interest rates until basically it causes a recession, demand for goods and services falls, it falls off a cliff, and then the Fed just lowers the interest rate in order to basically repeat this cycle. So how long, the last time the Fed started raising interest rates, from, let's say, April of 2016 to February of 2019, did it take to trigger a recession? And in fact, one never actually happened. This shaded region is the COVID-19 crash. So it took 3 years of Fed interest rate hikes. It got as high as 2.4%. And even then, we didn't trigger a recession. So these interest rate hikes are coming. Everybody knows it now. Everyone knows that inflation is a problem. But when is the next recession coming? 1, it's inevitable. You can't stop it. But 2, it could be years. It could be not until 2024, 2025, as the Fed keeps raising interest rates. So I think that is why the market is sharply green today. Lots of investors have been sitting on the sidelines with cash, wanting to deploy it, but they just wanted to get this first interest rate hike out of the way. Another thing happening in the background is obviously the Fed has stopped buying US Treasuries. Hopefully, this is quantitative easing. So the 10-year Treasury yield is going to continue increasing. Currently, it's at 2.1%. And this is a guarantee, guys. So investors are always going to be asking themselves, do I want to put money in stocks and try and get a higher return, or do I just want to take that guarantee right now over 10 years of 2.1% a year? And this is only going to start getting higher and higher, potentially going to 3%, 4%. When you can start guaranteeing yourself 4% on your money, that's pretty good. Checking in with the S&P, let's think about where we are basically since January 4th when the market was at 52-week highs. And after the last 3 days, we're only down about 7.5%. The vast majority of my holdings between my 401k, my IRA, and my Fidelity brokerage accounts are just in S&P 500 index funds. So my Schwab accounts just got kicked in the teeth because I missed this 6% gain over the last 3 days. But I'm still winning in this market whenever it bounces back. Okay, let's now go to the technicals because this is really interesting. In my last video, I told you that we were locked in this downtrend, trading between these two slope lines, and the trend's not broken until we can get a green candle to fill outside of these lines. That happened yesterday, it's going to happen today, and this is good news for the market because pending some other external, traumatic events, I think the market for now has bottomed. The S&P reaching 4150, it tested this level 1, 2, 3 times. That appears to be the floor now for investors and the floor for trading algorithms going forward. All the computers saw this downtrend. They basically were just trading between this range. But now that this trend line has been broken, the computers are going to start searching for the next one. So if we're outside of this, potentially we're trading between a range. The upper limit for the S&P might be here at 4,500, so it could possibly drift up to there, and then there's going to be another market sell-off. Where could it find supports? Maybe around here at 4,300. It could even backtest this level at 4,150. But I think the S&P is now going to start trading within this range probably for the rest of the year. Will we reach new 52-week highs? I don't see what the justification for that would be based on arguably how overvalued as a whole. Obviously, with individual stocks, they can do whatever they can do. But for the market as a whole, these valuations that we were seeing up here were pretty rich based on the fundamentals. All right, let's pivot to my Schwab accounts, and I kept buying more puts, guys. I kept being wrong and basically just throwing money into a furnace, just burning it instantly. So all of these put contracts, you can see here, they're down 99%. I lost basically $3,400 over the last 3 days. But when you look at my accounts, I'm only down $82 today because my Google debit spread is up, my Apple call contracts are up, my Berkshire Hathaway credit spread now, or debit spread is also up. So I definitely threw away some money here, but I'm feeling confident I can get it back. I need to retool this account now that we've entered this new period of sideways consolidation. Once again, I'm looking for new positions to jump into. However, I want to show you some of the mega caps and their charts because we were looking at this a week ago. I mentioned Apple, how there's this long-term slope line going back years, and briefly, the share price of Apple got below it. That was a bad sign. However, with the last 3 days, it's successfully gotten back above it. There's still this sell-off downtrend slope, so I'm kind of curious in a day or two what Apple's going to do once it finally hits that. Microsoft as well, this multi-year uptrend slope held, but once again, it's knocking on the door of this longer trend down slope. Once again, I'm curious to see what it's going to do next week. Google, same thing here. There was a very nice uptrend slope going all the way back to the March 2020 crash. It bounced off of it. It's now basically hitting this longer trend or medium trend downtrend slope. Curious what it's going to do. Really good news for Amazon shareholders is this $2,800 level of support held during the sell-off last week, and you can see that they've put up 4 huge monster green candles as their stock finally was able to bust through this downtrend slope that they've been locked in basically since last November. It's really interesting now because Amazon is approaching this level of resistance here at $3,200. Potentially next week it'll get rejected, but if there's a green candle that fills above 3,200, then Amazon could probably rocket up to 3,600 or potentially make all-time new highs. Pretty interesting stuff. Okay guys, it feels like we've entered a new period for the market as we've escaped this 4-month downtrend that we were locked in. I'm still sitting on about $22,000 or $23,000 worth of cash. Next week, I will be taking some new positions. I'm looking at Amazon, I'm looking at Microsoft. I'm going to do some additional research to see if there's some others that maybe I just haven't paid close attention to the last couple months. Once again, my philosophy on my channel, guys, is if something is falling according to the charts, continue to let it fall. You don't have to buy it perfectly at the bottom. You can still get good prices on good stocks, even at this level, even after a green week like this. So I'm not experiencing remorse or FOMO or anything of the sort. I still feel like I have enough cash reserves where I can find some good positions to set me up for some gains going into this summer. Okay guys, if you enjoyed this video, give me a thumbs up so the algorithm knows it's good. Any comments or questions, let me know down below. I love hearing from you guys. Till the next video, take care.